Hi guys, it's Adam Panisi. I'm from Liberty Blue Wealth. I help aspiring property developers or existing property developers through education and be able to quit their full-time job and do property or property development and make lots of money and live a good life. So I just wanted to share with you something that's been in the news recently, and that's around the increasing steel supply from China, or more importantly, the raw building materials that we rely on here in Australia that we import from China all of the time, and we've become so reliant on China over the last really 10 to 20 years. So I was just reading about that China is going to increase tariffs and exports to Australia, namely to do with steel, and I'm sure it's probably transpired into other exports as well back to Australia. So just with the steel, they've stopped our import of iron ore, so the price of iron ore's gone down. We're now exporting that to other countries, and that has a flow-on effect to governments handing out stimulus packages because now the government's earning less money from the royalties from the iron ore export. But also off the back of iron ore, which goes to China, China's now restricting or increasing the cost of our steel back into Australia. So steel, as you know, goes into concrete to build houses, among other things. Houses, apartments, units, factories, everything. There's a lot of stuff that's got steel in it. Bridges. So anything in our building industry, really, when it's got concrete involved, it's got steel in it. So building prices have already gone up at least 20 to 30% this year. I'm seeing that across our projects for the majority of part. So what that's going to mean is building prices are set to go up more, and that could be another 20 or 30% over the next 9 months. It could be longer. I don't think building prices are going to stagnate at least for another 12 to 18 months. And when they do, I just think that they will flatline. I don't think that they're going to start going backwards, or at least not in that sort of period. So it is a little bit scary that steel is going to go up again. It's already doubled. And I think it's pretty eminent that it's going to happen. Whether you believe that the market is going to flatline, even just with raw building material prices increasing, the property market has to absorb that somehow. So at the moment in Queensland, there's very limited stock on the ground. And by stock, I mean raw land, or anything from raw land to houses, apartments, basically dwellings to live or dwellings to be built. So because there's limited supply, it means that we're going to have to build more dwellings to accommodate people moving into the area. And because there's no overseas migration, Sydney and Melbourne are going to be affected by no overseas migration. So I expect that building will slow if it hasn't already in those locations. But here in Queensland, it's actually the opposite. We're getting a record number interstate migration. They were already record number migration figures before COVID. Now that's just accelerated that, probably double as to what the previous forecasts were. So I think for the short term, and short term being 12 months to 24 months, I think we'll see 20 to 30% build price increase, and that can only filter through to end sales or end products. So the property market, irrespective of any capital growth, just the fact that we have inflation and it's artificial, inflation from the materials to manufacture the houses, that will push property prices up by at least 10%. And I mean, that's the forecast that we rely on anyway for certain regions. So in this region that we're in, Southeast Queensland, we expect across the board the market's going to go up 10% in the next 12 months. In particular pockets, I think that's going to be accelerated somewhat more substantially than that. Anyone wants to build a new house. I mean, I'm looking at building a new single residence for myself. We're building townhouses, houses. Those prices have already been locked in, but if you haven't locked in a price now, you're going to experience further price increases over the next 6-12 months or even into 24 months. So if you're looking at getting into property, or even just buying your own home or a single residence, I think now is probably the best time, or at least in southeast Queensland. I'm not saying that about Sydney or Melbourne. I think there could be some opportunities coming in Sydney and Melbourne, sort of in the next 1 to 2 years, as in good buying opportunities. But if you're looking in southeast Queensland, there's a great opportunity now to purchase. It is a little bit tougher than normal to get into the market, but just keep in mind as well, if you are buying a property, whether it's to develop, you're looking at developing it, or it's just a single residence investment or your own home, just keep in mind that the 10% growth that's predicted, and if it ends up being 20, that's across the board. That's not your one residence. So if you overpay by 10%, on the property, if it's $1 million, if it's worth $1 million and you just paid 1.1, well, that 10%, you may not see that property worth 1.1 for another 12 months. So just keep that in mind, that not every single property is going to grow by 10%, and to cover just your agent fees and stamp duty fees, if you want to resell the property, you need 10% or close enough to, just to break even if you are looking at just a buy and sell. So just keep that in mind as well. There's going to be a lot of wealth made in the next 12 months in southeast Queensland, but you need to know the market. You need to buy well, and don't compare, if you're living in Sydney or Melbourne, don't compare Queensland market to the Sydney or Melbourne market. We are very different here. Property is cheap in some areas for a reason, but we have seen some pretty massive growth. So just if you are from Sydney or Melbourne or down south, or you're interstate, you're not local, a lot of our property prices in some premier suburbs have gone up by 50%, some of them double. There's a property I just put an offer in for earlier today. Those blocks of land just over 12 months ago was selling for 350,000. Similar blocks of land are selling for 650 now. So literally in 12 months, they've gone up by 100%. So it's pretty crazy to think that 12 months, 100% growth on land, let alone the completed product. So just keep in mind, we have in some parts of Queensland, and that's actually right on the border of Queensland, New South Wales, a particular location. Some parts of Queensland have experienced some pretty substantial growth. There's still a lot more to come, so just have a look out for those suburbs that are undervalued, where people have the capacity to pay, not just now, but into the future. They're suburbs that people want to live in, so lifestyle is a big thing at the moment. Everybody's moving out of Brisbane or moving from down south to come and live in Queensland in desirable locations. Living and working flexibility is paramount. I mean, we moved from Brisbane to the Sunshine Coast just because we wanted to be close to the beach. And there's a lot of other people doing that as well. So just keep that in mind. There are some suburbs that are going to grow by a huge amount, and there are some suburbs that are not going to grow anywhere near. All right, thanks for watching, and good luck with your investing.